ideal scenario of me getting out right then when it's supposed to happen, sometimes TradingView prevents that because it lags. And it won't let me do what it is that I'm trying to teach you to do because there's a lag. And I don't know what causes it. And I'm sure they've been told by other people, but even with those gremlins that creep into this, okay, you can see that there's a rhyme and reason as to what price is doing, and it's repeating. And I talked about the new week opening gap since I mentioned it and just, opened the discussion about it the last 2 weeks. There's a lot of attention around it, interest, and the new day opening gap and the consequent encroachment of those two respective imbalances. And now I taught the implied fair value gap. And yes, there's other things. And I thought about, trying to release one new thing each week. And it kind of hit me earlier this afternoon. I was taking a drive with my wife, and she asked me what I was in deep thought about because I was quiet. She was, "Are you okay?" I said, "Yeah, I'm fine. I'm just thinking about what I want to do next week." And I started talking to her about it, and she said, "Don't you think this is a lot of stuff? Like, this is a lot of stuff. And if even the people that have been with you the longest time, if they don't know this stuff, the new students that are coming to you right now, I'm going to inundate you with stuff that's going to constantly have you spinning your wheels, and you won't learn how to use it effectively." So I think I might do two more concepts that are brand new, but what we have now with the core content, last year's model, and the introduction of the new week opening gap, new day opening gap, and the implied fair value gaps, we have enough weapons to make you a savage. We can do that. I didn't need to do what I've done in the last 2 weeks, just using what it's already on the YouTube channel. I can make you into a consistently disciplined speculator. I can do that. That doesn't mean that you're going to be profitable, because that has to happen with a live account. And I'm not telling you to do that with live money ever. You have to make that decision. So when we look at these new week opening gaps, I spoke on the topic of how it goes back to constantly referring to them as a dynamic fair value. So the concept still is fair value. It's going back to these levels because it is utilized to inspire large fund sentiment, not retail stop me out. It's to inspire fair value for large institutional investors that bring money into the marketplace, because it comes back to these levels knowing that typically they use the analysis of the previous week. And if the market has moved away from those levels, the algorithm prices in, and it's coded to allow it to rig price back to those levels to offer opportunity for large flows to enter the marketplace. Not that large flows pushed price to these levels. It's going to go to those levels regardless of how much buying and selling is going on. But when it happens, it's designing the very stage for participants to come into the marketplace, have real orders right then and there. And then the counterparty dance between smart money and the less informed trader begins. So I talked about how if we go to the E-mini S&P template that I use when I'm trading, it's the one that has the hourly chart in the upper left-hand corner, the 15-minute chart in the lower left-hand corner, and then the 1-minute chart. So if you go to the video on the live stream, I'll give you a moment to scrub over to the 1 minute where I expanded it large. Let's give me a minute so you can do that real quick. All right, so 1 minute E-mini S&P futures contract chart, and I have all my annotations on it. I was talking about how this morning on the live stream that I was sharing my coaching session with Cameron, I outlined and I banned 2 people or blocked 2 people on my Twitter account that sent me a tweet saying that I was talking about the direction both ways. And then when I came back, I said, must be random. If you don't listen to the live stream intently and understanding what I'm outlining, I'm giving you a narrative, what I really want to see. Every time I talked about where the market was likely to do this or do that, I would say, but I don't want to see that. I want to see a run up into that fair value gap on the hourly chart. I kept going back to that. That is me telling you, like when I say on Twitter, I'll say gun to my head, or if I'm in my commentaries, when I was doing the commentaries for my students, if I have a period of time where if I happen to be in front of them, I'm doing analysis, which was every day. If there's a time when I know I'm between analysis points where there's nothing I can do right now because I'm waiting for more information, it just means I have to wait. I have to exercise patience. There is no setup right now, or I don't have a clear bias as to what I want to do at that very moment, just because the time says it's time for another video. The market's sometimes saying there's time to be doing nothing right now. So therefore, instead of being, in my opinion, rude as an educator, because I can always find something to teach and talk about, I didn't want to just say there's no trade, to just be patient. The only time I ever did that is when I wasn't well. I was sick and I lost my voice or just didn't feel well. That's the way it was. It was just, there's no session. But because I was always doing commentary, if it was between a time when the market was suggesting to me there was something obvious to do, then I would say, okay, this is what it would happen if it's going to go higher. This is what it's likely to do. Otherwise, it might do this. And I don't know which one it's going to do. So we're what? We're in low probability. But even in those instances, I would say, gun to my head, that means I have to co-sign right now, even though I wouldn't commit with a trade going into this. If I had to say right now, based on what the charts are saying, at the very moment of me talking about it over the charts and analysis, I always share my view. I was doing that live on the 1 minute chart with the ES this morning. I kept outlining, okay, if it does this, then it would negate the idea or interest for me to go up into that fair value gap. If it trades down here to that buy side imbalance, sell side inefficiency, which is there's two dark blue lines dead center at 4005 and 4001.5. That's that 15-minute fair value gap. It's a buy side imbalance, sell side inefficiency. And I was talking about how if it went down there and traded below 4111.75 before 9:30, it completely negates the whole idea that I would expect that 60-minute fair value gap. Now, for someone that's looking for trades, that's looking for the deciphering of how can I take a trade based on what he's saying right now, or for someone that's listening and not really trying to learn, they're looking for something to evaluate from a transactional basis only. They hear two sides of this, of the same coin, and it's 50-50, and whatever happens, ICT is going to come back on Twitter and there it is. No, man, no. Okay. I literally said that I'm telling my son, I said, I want it to go above 40.25, trade up into the 40.30s because of that 60-minute fair value gap. That's my trade. That's what I wanted. I outlined every potential scenario that could have unfolded this morning, and I negated every single one of them, saying I don't want that. I want the run up into the buy side and into that fair value gap. That's my trade. That's what I'm looking for. And I kept telling Cameron, we don't want to see this, but I said, that sell side liquidity pool that was formed in the lows between 5:30 and 6 o'clock, if you have that 1 minute chart up that I was sharing in the live stream, I mentioned, and it's in the live stream this morning, you can go back and listen to it. I said, I'm interested in seeing, do they take it down there just below it by a little bit, run those stops, and then reverse it and take it back up and keep it inside the range, and then wait for 9:30 before they go into that fair value gap. I want to see that. And then I said in that live stream, at 9:30, the initial move at 9:30 is the fake move. That's the Judas swing. Go back and listen to it. I can't edit it. It's live streamed. It's not an uploaded recorded video. It's time and date stamped. It says it's been live streamed. It was only one Michael in one time window between 8:15 and 9:04 this morning. I can't be in more than one place than one time. Okay, I'm not omnipresent. So I can only be there live talking about whatever it is I was thinking about. There was no extra chart somewhere else, other laptop supposedly recording another outcome. I was literally taking you into the mind of inner circle traders saying, this is what I'm looking at right now. I'm reading every single one of these candles and I'm telling my son, this is what we're looking for. This is what I want to see. And at 9:30, if that fair value gap, that red fair value gap that was on the 60-minute chart, trading between, what is it? I don't know what the hell that is. Uh, 40.33. No, that's not right. 40.30.25. That level, the fair value gap low, the consequent encroachment, which is the midpoint, 40.30.25 or 50, something like that, is consequent encroachment. And then the high of the fair value gap, which is around 40.30. So I don't know what the hell that is. 40.37.25. Okay. If 9:30 hasn't seen that fair value gap traded to yet, and we have a move going down after 9:30, this is what I was outlining and talking about, that's a Judas swing, because I want to see it run into that 60-minute fair value gap. So if that's my trade and that's what I was outlining, and everything I was outlining this morning, if it was against that idea, I said, but that's not what I want to see. Go back and listen to it. I'm hardlining it. There's no way any of you can fucking take that out of context. I was looking for price to go up to the buy side and dig into that 60-minute fair value gap. There is no fucking ambiguity at all in that. None. And so when I read these two jokers this morning talk about this shit, saying, oh, see, this is why I get mad, and I can see how people get mad, because it was like both sides were explained, and then he comes back and says this, and then I don't like the blind cheerleading that everybody does when they don't know what the fuck he's done or what's going on. People were fucking trading it. They knew exactly what the fuck was going on. So that's the kind of shit I talked about in the last Twitter space. If I see that kind of shit, I ain't got any fucking time for you. I'm banning it. I'm blocking it. I don't give a fuck what you think about me. Okay? I'm not going to waste my attention on that kind of shit. If you think I'm a fraud and a scammer, go fuck yourself. Okay? That's as plain as I can make it for you. Fuck you. Because I'm literally out here walking this shit live in a manner that nobody else has done before, and nobody can do it either. You can do it. Come out here and do it. And do it when I'm doing it, and I'll do it 25 times better and more precise than you. I'm here for that. That's why I chose this medium, Twitter. All the drama started here. I'm back here ending it. I'm closing the fucking chapter. Nobody's closing shit on me. I'm doing it. So when it hasn't at 9:30 traded up into that 60-minute fair value gap, the initial move that you hear me describe in the 9:30 opening session, before I closed the session this morning, the live stream, while the GDP number was coming out, I was explaining that I don't want this to happen, but I want this to happen. If it does this, then I don't have a trade. I literally walked you through exactly how to look at the marketplace at 9:30. And you didn't need me, which is why I wasn't fucking there. Hello. I had already outlined it. I've literally called the whole fucking narrative before it ever unfolded. That's foresight. That's ownership. That's authorship. That's fucking fingerprints all over that motherfucker. That drop down on the 15-minute time frame is dropping down into a 15-minute fair value gap. And it's also dropping down into a 15-minute order block that's bullish. Go and look at your 15-minute time frame. That's what you watch me in this, what was supposed to be a really good market review, but you couldn't hear me talking. I was talking about how it drops down right into that fair value gap on the 15-minute time frame and stops to the tick. inside of a bullish breaker that's on the 1 minute chart. So you have a bullish order block on the 15-minute time frame. You have a bullish breaker on the 1 minute chart. You have a 15-minute discount fair value gap that it comes down into perfect delivery to the low tick. And it's happening with the narrative I outlined during the 820, 830 GDP number. I want to see the move that happens at 9:30. If that gap on the 60-minute chart that's red on the chart, if that has not been traded to yet, the fake move at 9:30, which would be what? Dropping. That's a Judas swing. And then you saw my son do what? He used everything I'm talking about here, but he's slow, so he didn't push the button until the next candle started running up. So that's why you see a sloppy entry. But he's learning, folks. He's just like you right now. He's learning how to do it. Just because I'm sitting right next to him doesn't mean he's going to have the exact entry points and precision that you see me doing when I'm doing executions.